Another year has flown by in this ever-changing Toronto real estate market. Let's recap what happened in 2025 and what that means for you. Last year in 2024, I predicted that the market would come down this year in 2025. But it wasn't really the most brilliant prediction. It was like saying, spring would come after winter. But one thing that I did mention was that I didn't think the bottom would be lower than the peak real estate prices of 2017. Let's take a look at what I said last year.
Here's the peak in 2024, right? Every year for the last 3 years, we're coming down in terms of sales price. So if we were on a roller coaster, yeah, we're definitely heading down. The question is, where is the bottom? Now, with real estate, I don't think that bottom is ever going to be ridiculously low because kind of like cryptocurrency, there's a limited supply. Where? Well, if you want my opinion, I don't think we're ever going to see prices go below the peak of 2017, right here. April 2017, 917,000. So if we could draw an imaginary line here, I don't think that bottom is ever going to touch that number.
Okay, that was 2024. Let's take a look at 2025 using real data straight from the source, the Toronto Real Estate Board. We're getting pretty close, dude. We're getting pretty close to that bottom. I said that prices wouldn't dip below this average price of 1.12 in 2017. This is freeholds, by the way. We are pretty close. 1.226 is November. December data is not out yet, but it's going to be lower. So as you can see, we've just come down and we're still coming down from 2015. And we're getting awfully close to that bottom that I said that we would not cross. This data chart is kind of hard to, decipher. So let's look at actual numerical values from our chart. So this is 2024. This is 2025. And if you compare month to month, ever since March, every month in 2025 has seen a significant reduction in sale price. So December, as I said, the data is not out yet. It's going to be the same thing. We're going to look at a lower number. So right now it's 1.226 in 2025 of November. That peak that I said we would not go below was, I think, April of 2017, 1.121. So we are 100K away, less than 10% away from dropping below that peak in 2017. So this drop is happening a lot quicker than I was expecting. It's happening in real time. And if you've bought or sold, have been watching the news, I'm sure you're aware that home prices aren't doing good. And this is just freehold. We're not even looking at condos, right? Which we'll take a look at later. And why is this happening? Well, real estate is very, very cyclical, and it's very, very either trends up or trends down. And the reason for that is the domino effect of real estate. For example, if there's a house on a street, 123 Main Street, and they're looking to sell, and they're looking at previous comparable sales of similar homes that have sold, and they all sold for 1 million. Okay, well, the seller will list at 1 million, but there's only a finite amount of buyers. So 30, 60, 90 days later, that house still on the market doesn't sell, and that seller really needs to sell it because they're moving or they're bleeding on the mortgage. Well, then they might take like 10, 15, 20% less on that house. If they're motivated enough, they might take 850 instead of that 1 million. And as soon as that house sells at 123 Main Street for 850, then no other house in that neighborhood can justify that $1 million price range, or it's very difficult to justify the original 1 million price range. And that's what you're seeing, this downward trend. And it's not coming up, or it hasn't in the last couple of years, because there's not enough buyers to absorb it to make it go up, right? Finite, limited amount of buyers, ample amount of inventory, prices will come down. Now, my prediction, technically, I'm not wrong yet because prices have not dipped below the 2017 high yet. And again, if you want to watch an in-depth analysis why I think it won't, you can click that video. I'll put a link in the description. But long story short, we're not talking about tulips in the Netherlands, right? It can't be a crazy bubble, because houses are incredibly costly to build, especially now. Permits, taxes, labor, materials. So there's a premium on already built homes, right? Look at the government. They're spending like trillions of dollars to build like 6.5 houses, right? So it's very costly to build homes. Not to mention, we're still bringing in lots of people who still need homes. So that's why I think at a certain point, and not to mention the amount of money we printed, which is like a whole other story, but that's why I think prices do have a bottom and eventually prices will rebound. Because there's so many people here, right? And there's a finite amount of land, especially if you're in the GTA. All the expensive land has been built on, so that's why I think eventually it will rebound. When? It's really impossible to say because there's so many unknown variables that affect real estate. Nobody can tell you, right? Global economic factors, right? Are there going to be tariffs? Are there going to be a reduction of tariffs, increase in tariffs? That's going to affect the job market. Automation is going to affect the job market. That's going to affect interest rates. Are they going to allow more people, less people into the country? PRs, how many PRs are they going to give out? How many citizenships are they going to give out? Because these people are allowed to buy in Canada. So it's like there's no way for sure because there's too many unknown variables in the future. So we can only make a prediction. And I think every year as we approach the year 2030, the chances of the market rebounding increases with every year. When exactly? I can't tell you for sure. Nobody can. All I can say is that I don't see it rebounding in the next 12 to 18 months. I would be surprised if it went in an upward direction in the next 12 to 18 months, but you never know. And I'm doubling down on my prediction that I made last year. I do not think that prices will drop below that peak of 2017, which means we are close to the bottom. But imagine I'm wrong for a second and prices do drop below the peak of 2017. Think about what that really means. That means there has been no appreciation in home prices in the last 10 years, which is definitely an anomaly because homes in Canada normally grow all the time, right? It's one of the most steady investments, safe investments that you can make. And if prices drop below 2017 levels, that means if you bought in 2017 and you're selling now, a 9-year period, there's been no growth. That's crazy, especially considering how much they've devalued the Canadian dollar. So even if prices are the same, a dollar is worth less today than it was in 2017, which means actually you've lost money. It's mind-blowing, really, especially considering real estate is the backbone of the Canadian economy. That just goes to show you how much of a downward trend this country has gone in the last 10 years. And if you really want to pinpoint what has happened, this country really started going downhill economically when Don Cherry got fired.
Look, David Suzuki, left-wing kook, you're in Vancouver, it's warm out there. Why don't you come to Toronto? We've been freezing for 2 months. Record set. What is this warming trends? We're all dying of cold, and he's talking warming trend. What?
Okay, now let's dive deeper into the data. Let's break it down by asset type. First, let's look at freeholds, detached homes. We're only going to look at year to date, and we're going to group it by month now. Okay, so a downward trend in detached home prices here in the GTA. There's a lot of listings, 25,000. And keep in mind, December is not a full month. As of today, we are like December 5th. So not all of December has come out, not all of the data, but you can see prices are trending down. There's a bit of a peak in February and, as the spring market approached, and then it's been going down ever since at around the $1.2 million mark. That's where it currently sits. Keep in mind, slightly biased because multi-million dollar homes, luxury homes, mansions are included in this, and you're seeing quite a big drop in terms of percentage on those types of homes just because there's not that many affluent people buying and there's a lot of inventory for that. So that might be, biasing the data, skewing the data a little bit, but I think this is pretty accurate for detached homes. Right now we are looking, that's a pretty significant drop, right? From the peak, that's almost 200 grand from December until February. Again, not lower than the 2017 peak, but it is coming down. It came down a lot this year. So that's detached homes. Now let's take a look at semi-detached homes. Okay, interesting, right? Because you're seeing that the price from January until December, it's actually held its value a little better than detached. And the reason for that, just take a look at here. I don't know if you saw it before, but detached, there were like 25,000 listings. Semi-detached is only 5,000 listings, 5,500. And semi-detached, basically like one structure, two separate dwellings, split in half normally, they're attached, and two separate owners. And it's quite common in Toronto, it's quite common in some other areas. Some regions of the GTA don't even see any semi-detached, very rare. But a lot in Toronto for sure, and it's holding its value. And the reason for that is semi-detached homes, not only is there a limited amount of inventory, but it's like the first asset type where homeowners, end users that want to move into their house, that want to buy for themselves, it's the first asset type that's the cheapest where homeowners can buy that's not a condo. So there's still a good amount of competition, and that's why you're seeing prices hold their value. There still is quite a bit of a variation. You see the bottom in August, 989, and the peak in March, 1,125. Like that's still 150K, right? And you're still looking at like 10%, so it's not nothing, but it has held its value. Ever since the fall market in September, you're looking at the low 1 millions for semis. Okay, so now let's look at the last freehold asset type, apartments. Sorry, we'll look at apartments in a second. Townhomes, okay? Attached townhomes. Very interesting, okay? It started at $1 million in January, and again, it's held its value a little better. Not bad, not a significant drop year over year, not a crazy drop, but it is down. All of these asset types have come down, especially we're only looking at year to date, especially if you compare it to 2024, 2023, 2022, right? But we're just looking at year to date. Again, not a lot of listings in the GTA, 5,500 listings. Again, that's another reason. So the same factors of the semi-detached that allow that asset type to hold its value is true for townhouses as well. And if you look at the data, very similar trend to semi-detached, just at a lower price point, because these townhouses are typically a little smaller than semis. Not always, but typically a little smaller, and there's just a lot more inventory in like communities. So that's why they're slightly cheaper than semis. But the same trend is true. It's kind of held its value, that mid 900 mark in ever since the fall market in September. Okay, now the last type, that was freehold, meaning you own the land, you own the structure, no condo fees. Now let's take a look at condos, meaning you don't own the land, but you own the structure, and there's maintenance fees. We'll just look at condo apartments. There's other types of condos, by the way. A lot of people don't enlist. You can have a detached house that's a condo. So we're just gonna look at condo apartments, and let's take a look at year to date. Okay, honest, I was surprised by this a little bit, because yes, the price is down, but ever since July, it's held its value, right? So pretty stable. And then if you look at the data, pretty stable, down a little bit. And if you calculate the peak, which is 700 down to 662, I mean, that's a 30K drop, which is less in dollar value, but percentage value, I can't do the math off the top of my head. I don't want to do it now, but it's a similar trend to freeholds, right? It's just because the dollar value is smaller, the percentage is actually similar. Now, what I think is interesting here is that, yes, the condo market is bad, but a lot of these bad homes aren't even being sold. They're not being absorbed. And this is only counting homes that are being sold. So there's an opportunity for sure for these condo apartments to plummet, especially if you go downtown Toronto, where there's just so many active listings. So I can see this coming down, but you know, devil's advocate, there's a counterpoint to every point. The amount that people can buy, like end users, is coming down, right? Canada is just not as affluent as it used to be, which means there's more. If you look at like the social economic status of a country, there's more people at the bottom, which means there's actually more competition the lower the price for the asset, right? Makes sense. So the bottom for condo apartments, yes, it's coming down, but at a certain point, if it becomes so cheap, there's just way more people that are able to afford this. Like if a condo, two-bedroom condo goes down to 500K, it's gonna be hundreds of thousands of people that are now like, oh, I want one. But if a $4 million mansion goes to a $3 million mansion, even though it's come down by $1 million, 25%, how many people can stay, oh yeah, I can afford the $3 million house, right? So you get my point. So you can look at this both ways. But again, this is a good breakdown of what has happened this year. Prices are trending down. And like I said, for every asset type, where it goes in the future, I mentioned before, I don't think it's going to drop below the 2017 mark. Hopefully not. We will see. But I just wanted to give you guys a breakdown for every asset type. And just some food for thought. Here is the last 10-year performance of the S&P 500. Okay, and here's the last 10-year performance of Bitcoin. So there's two ways you can look and interpret this data. You can say, oh man, things are going really bad, really south from here. Or you can frame it like, man, this is an opportunity of a lifetime. And remember, the data doesn't care. It's objective. You, the viewer, the observer, determine whether the glass is half empty or half full. And that's the beauty of the market. That's the beauty of real estate. I've made predictions, right? Using data, using qualitative factors, but nobody can tell you where the market is going to go with absolute certainty. And that's the beauty of this game. So thank you for watching. Looking forward to what happens in 2026. And we will see you next time.